All right, get ready, because we're going to take a deep dive into something pretty fascinating today. We're talking about Ethiopia. After, decades of keeping their banking sector completely homegrown, they're about to open the doors to foreign banks.
Yeah. Yeah.
It's a move that, this has the potential to completely reshape their whole financial landscape.
Oh, absolutely. This is a historic change. It's a system that hasn't really seen this kind of shift, since the 70s.
Yeah, exactly. So for this deep dive, what we're doing is we're looking at a recent article that really gets into the nuts and bolts of this new law. What does this all mean? Not just for the finance people, but for everyday people who live in Ethiopia.
Right.
And, it's a story about potential benefits, but also potential pitfalls and a whole lot of questions about how this is actually going to play out on the ground.
Yeah, and one of the first things you notice about this new law, it's not just like, a free-for-all. Foreign banks can't just come in and take over.
Right.
There are some very, very deliberate limitations built in.
Okay, so let's unpack that a little bit. What does this law actually say about how foreign banks can get involved?
Well, it sets out a few different ways. So, they can establish subsidiaries, set up branches, they can open representative offices, or even acquire shares in banks that already exist in Ethiopia. But, and here's the catch, there's this 49% ownership cap.
Oh, okay.
For any foreign entity.
So majority ownership, it has to remain Ethiopian.
Exactly.
That's interesting. So it's a balancing act. They're trying to encourage foreign investment, but they don't want to lose control, right?
Exactly. And, it'll be really interesting to see how this plays out. Is 49% going to be enough to attract the big players, the international players? And will it be enough to actually, create some real competition in the current banking system?
So I'm curious about the timeline here. Are foreign banks already lining up, ready to get a piece of this action?
Well, the government has said that they plan to issue up to 5 new licenses for banks over the next 5 years. But there's no set start date. So things are still very much, in the early stages.
A measured approach. I like that.
Yeah.
Okay, let's talk about the potential upside. Why is this such a big deal for Ethiopia? What are some of the good things, the benefits that people are hoping will happen?
So I think one of the most kind of anticipated benefits is that competition's going to increase.
Right.
And you got to remember that Ethiopia's banking sector has been pretty insulated for decades.
Right. They haven't had to compete.
Exactly. And so introducing new players, especially those with international experience, could really shake things up.
It's not just about having more banks. It's about having banks that are actually pushing each other.
Right.
To do better, to have better services, lower their fees, to innovate, all that.
Yeah, exactly. Think about it like this. Think about if you've been going to the same bakery, your neighborhood bakery, for years. It's fine, it's okay, but they're not really pushing the boundaries of what a croissant can be, right? And then suddenly this fancy Parisian bakery opens across the street.
Okay, I see where you're going with this.
Yeah, and now suddenly your old bakery, they have to up their game.
Right. Okay, but let's go beyond the bakery. What are some actual concrete ways that Ethiopians will benefit from this?
Well, for starters, it could lead to, greater financial inclusion. Think about all the people who have been excluded from traditional banking, small businesses, farmers, women.
People in rural areas.
Especially in rural areas, exactly. And they might lack access to credit. Foreign banks with, a wider range of products and also their experience in other developing countries could really help close that gap.
So we're talking about things like microloans, maybe mobile banking platforms, that sort of thing.
Exactly. It's about making financial services more accessible and more relevant to a wider range of people.
Not just the people in the big cities.
Right.
And wouldn't this also have a ripple effect on the whole economy? More people participating, more opportunities for entrepreneurship, more investment.
That's what everyone's hoping for. And it's not just about the financial products themselves. It's about the knowledge, the expertise that these foreign banks are going to bring with them. They've operated in different regulatory systems. They've dealt with these complex markets. They've got very sophisticated risk management.
Yeah, there's a learning curve, right, for the Ethiopian banks. They can really benefit from this.
Exactly. And I think that transfer of knowledge could be one of the most, kind of lasting impacts. It could raise the standards of the whole Ethiopian banking sector, make it more competitive on a global scale.
You're really painting a picture here. I like it. But I think it's time to address the elephant in the room. There must be some concerns about foreign banks coming in. No change is without risk.
You're absolutely right.
Right.
Yeah, definitely some potential downsides that need to be really thought through. And one of the biggest ones is this risk of market domination.
Right. So instead of creating more competition, there's a fear that these big, powerful foreign banks could just come in and, squeeze out the local players.
That's the worry. And it's not an unfounded worry, right?
Yeah.
Because foreign banks, they often have more money, more experience, operating in competitive markets, and they have global networks already in place.
So how do you prevent that? How do you make sure that Ethiopian banks can, stand up to these new giants?
Well, that's where regulation comes in.
Okay.
This is where the National Bank of Ethiopia, they've got a big responsibility here. They've got to make sure that everyone's playing on a level playing field and that there are no, kind of unfair practices that could hurt the local banks.
So they need to be a strong referee.
Exactly.
Make sure that everyone's playing by the rules. But what does that actually look like, practically speaking?
Well, it involves a lot of different measures, from, setting very clear rules on market share and foreign ownership to making sure that foreign banks are following the same lending standards and regulations as their Ethiopian counterparts.
Okay, so it's about encouraging competition, but also making sure that local interests are protected.
Exactly, yeah.
But isn't there also a risk that, these foreign banks, because they are so tied to the global economy, could just pull out of Ethiopia if things start to get a little bit rocky?
That's another valid concern. Economists call this economic vulnerability, right?
Okay.
Because these foreign banks are way more exposed to these global shifts and to political uncertainties.
Yeah, so let's say the global economy takes a nosedive, or there's some, political instability here in Ethiopia. Those foreign banks could decide, all right, we're cutting our losses. We're moving our money somewhere else.
Exactly.
And that would have a ripple effect on the whole Ethiopian economy.
No.
This is starting to feel a little bit like a high wire act. You're trying to attract foreign investment, but you also want to protect local businesses. You want more competition, but you don't want to, scare away the foreign banks.
It is. It's a balancing act.
Yeah.
And, that's why this move by Ethiopia is so interesting to watch. It really is. It's a balancing act with really high stakes, with the potential for huge success, but also potentially some really significant challenges.
So it really does feel like Ethiopia is at a crossroads. Does the article give any, real world examples? Has this worked in other countries or not worked?
Yeah, there are definitely lessons that can be learned from other countries that have kind of liberalized their banking. Like, for example, some countries in Southeast Asia, they saw big benefits from letting foreign banks in terms of innovation and, making it easier for small businesses to get loans. But there were also, situations where the local banks had a hard time competing. And that led to some of them, merging together. And in some cases, actually fewer choices for consumers.
So it's not like a magic bullet.
Right.
It depends on the situation, the country, how strong their regulations are.
Exactly.
And how ready the local banks are to deal with this kind of competition.
Exactly. And the article really emphasizes, they keep saying, getting that regulatory framework right. Like finding that sweet spot where you're attracting foreign investment, but you're also making sure the local banks have a fair shot.
Okay, so let's dig into that. What are some things like specific regulatory measures that could help achieve that balance?
Well, one key area is, capital requirements.
Okay.
So regulators could say, okay, foreign banks, you got to have higher capital requirements. Basically, they'd have to keep more reserves in Ethiopia. And this would, kind of reduce the risk of them pulling out quickly if things get unstable.
Okay, so it's like they have more to lose.
Exactly.
So they're less likely to just run away
Yeah.
if something happens.
Exactly. Another important area is prudential regulation.
Oh.
And this is all about, setting strict rules for things like, lending practices and risk management.
Right.
And even corporate governance, making sure these foreign banks are operating responsibly.
So it's not just preventing them from dominating.
Right.
It's also about, preventing them from doing anything too risky that could hurt the entire financial system.
Exactly, yeah. And then there's consumer protection, right?
Right.
Regulators need to make sure that Ethiopian consumers are protected from, unfair lending practices. This might mean setting limits on interest rates, requiring really clear disclosure of fees and charges, and maybe even having a, system for dealing with disputes.
So building in some safeguards to make sure people aren't being taken advantage of.
Absolutely. And it's not just about setting these rules,
Right.
it's about enforcing them. The National Bank of Ethiopia needs the tools and the expertise to actually watch these foreign banks.
Yeah, this brings us back to that capacity building, right?
Yes, absolutely.
That we were talking about before. I mean, if they're going to be an effective referee, they need to know how to handle all these new challenges.
Absolutely. And in, this capacity building, it needs to be on multiple fronts, right? It involves training staff, investing in technology, developing new regulations, and maybe even, working with international organizations or other regulators who have done this before, who have experience with open banking sectors.
It sounds like a huge undertaking, but also kind of exciting. I mean, it's a chance to really modernize the entire Ethiopian financial system.
I agree. And it's not just about the technical side, the banking and the regulations.
Right.
It's also about building trust and being transparent.
What do you mean by that?
Well, for this to work, both local and foreign investors need to feel confident. They need to believe that the rules are fair, that they're going to be applied to everyone,
Right.
and that the National Bank of Ethiopia knows what they're doing.
So it's about predictability, stability.
Exactly, yeah. And that doesn't just happen overnight. You need clear communication, consistent policies, and you got to show people you're committed to transparency and accountability.
Now, the article also mentioned something about foreign banks bringing in, expertise, specifically in areas like risk management. What can you tell us about that?
Yeah, so one area where Ethiopian banks could really learn a lot is managing currency risk.
Okay.
As the Ethiopian birr becomes more connected to global markets, they need to be able to deal with, the risks that come with currency fluctuations.
Okay, so for someone who doesn't spend all day looking at exchange rates, why is this a big deal?
Okay, so imagine you're an Ethiopian business and you've taken out a loan, but it's in US dollars from a foreign bank. Now, if the birr weakens against the dollar, that loan just got a whole lot more expensive to repay.
Right.
And that can be really bad for businesses. It can even lead to, them not being able to pay back the loan at all.
So these aren't just like theoretical concepts. This has real consequences.
Exactly. And foreign banks, because they've worked in so many different places, they have more experience managing these risks. They can bring that knowledge to Ethiopia, help the local banks and businesses figure out how to navigate all this.
That makes a lot of sense. But of course, there's always, the flip side. We've talked about the economic vulnerability, the foreign banks pulling out. But the article also mentioned something called capital flight.
Yeah.
What is that, and why is it a concern?
So capital flight is basically when a lot of money leaves a country really quickly. Usually it's because people have lost confidence in the economy, or maybe there's some political instability. It's like everyone is trying to get their money out at the same time because they think it's going to lose value if it stays there.
So it's not just the foreign banks. It could be anyone who has assets in Ethiopia.
Right, exactly. And it creates this downward spiral. As money leaves, the currency loses value, which makes even more people want to pull their money out. It can really hurt an economy, leading to inflation, shortages, less investment.
Yeah, definitely something to avoid. But, I mean, can you really stop people from panicking and moving their money if they think things are going bad?
It's not about stopping it completely. It's about making it less likely. And that goes back to, building a strong, stable, and transparent system. If investors trust Ethiopia's economic policies, its regulations, and its political situation, they're less likely to panic and pull their money out at the first sign of trouble.
So it's about building a system that can handle the rough times.
Exactly. And it's about building trust, not just with foreign investors, but with Ethiopians themselves. They need to feel like their savings are safe and that the system works for them.
It's interesting how much this all comes back to trust, right?
Absolutely.
It's not just about rules and regulations.
Right.
It's about creating a system that people believe in.
Absolutely. And that's why transparency is so important. The government, the National Bank of Ethiopia, even the foreign banks, they all need to be open about what they're doing, their policies, how they assess risk, and they need to communicate clearly with the public, address people's concerns, and build that confidence.
So it's not just about doing the right thing. It's about making sure everyone knows you're doing the right thing.
Exactly. And that's not always easy, in a situation that's so complex and constantly changing. But it's essential if Ethiopia wants to benefit from opening up its banking sector and also minimize the risks.
Now, the article also talks about the specifics of regulation.
Right.
like needing a comprehensive and transparent regulatory framework. What does that actually look like in practice?
Well, first you need clear guidelines
Okay.
on how foreign banks can operate in Ethiopia. This means things like licensing requirements, limits on what they can and cannot do, and rules about how they're managed and how they deal with risk.
So like a clear rule book that everyone has to follow.
Yeah, that's a good way to put it. And it's not just about making the rules.
Right.
It's about enforcing them. The National Bank of Ethiopia needs to be able to keep a close eye on these foreign banks. Audit them, investigate complaints. If they find violations, they need to be able to take action.
So they're not just a referee, they're more like a watchdog.
Yeah,
And
exactly.
making sure everyone's playing fair and protecting consumers.
Exactly. And it's important to remember that this regulatory system, it can't be static. It needs to be flexible, able to adapt as things change, New risks emerge, new financial products. The rules need to keep up.
So it's not a one-time fix. It's an ongoing process
Right.
of monitoring, adjusting, refining.
Exactly. And this is where collaboration with international organizations or other countries' regulators can be really helpful. The National Bank of Ethiopia can learn from what others have been, share information, and get help building their capacity.
So it's not about Ethiopia doing this all alone.
No.
They can learn from others.
Exactly. And it's about recognizing that this is a long-term thing, There will be challenges, setbacks, and there's always going to be new things to learn. But if Ethiopia does this strategically, thoughtfully, they really have the potential to create a system that benefits everyone.
Well, we've covered a lot of ground, from the benefits of more competition and financial inclusion to challenges of regulation to, scary things like capital flight. It's definitely a complicated move with lots of potential, but also potential problems.
I agree. Yeah. And what happens in Ethiopia could have implications for other African countries that are thinking about doing similar things.
So Ethiopia's experience could be really valuable for other countries
Yeah.
who want to open up, but also protect themselves.
Yeah, it really drives home the point that we're not just talking about, numbers and theories. We're talking about people's lives.
Absolutely.
The decisions that are made, they're going to have a huge impact. On the future of the country and all the people who live there. Yeah, and that's what makes it so interesting to follow, It's about ambition, taking risks, and navigating this global economy that's always changing.
And it's a story that's still being written, right? I mean, we've talked about the potential upsides, the downsides, the regulations, all that capacity building. But ultimately, whether this works or not depends on so many things that we just don't know yet.
That's right. We can lay out the factors to consider, but there's no way to predict the future. A lot depends on how the government handles all of this, how the foreign banks actually behave, and how Ethiopian businesses and consumers react.
It really reminds you that economics, it's not just about, charts and graphs. It's about people, how they behave, what motivates them, how they adapt to new situations.
And it's also about those unexpected events.
Right.
That no one can control, that can throw everything off. Like, think about the pandemic.
Oh, yeah.
The war in Ukraine, the ups and downs of commodity prices. All these things have affected economies everywhere.
So even with, the best plans and the strictest regulations, there's always that uncertainty.
Absolutely.
Just never know for sure what's going to happen.
Exactly. And that's why leadership and adaptability and being willing to learn from mistakes, that's so important. The government, the national bank, and the private sector, they'll all need to work together, watch things carefully, and be ready to make changes.
It's not a set it and forget it kind of thing.
Yeah.
You got to be ready to adjust course.
Exactly.
Right.
And that's why, this deep dive has been so helpful. It's not about giving you all the answers. It's about giving you the information and context to understand this complex situation. And then, you can form your own opinions, have your own conversations.
And speaking of our listeners, we've looked at this from every angle, but now we want to hear from you. Imagine you're advising the Ethiopian government. What's your top priority? How do you make sure this benefits everyone, from the small business owner in a village to the big corporations in Addis Ababa?
You got to think about that balance, attracting foreign investment, but also helping local businesses grow, making sure everyone has access to financial services, but also protecting consumers, and of course, the long-term health of the Ethiopian economy.
No easy answers. But by thinking about these questions, we can all become more informed, more engaged in this really crucial conversation about Ethiopia's future.
And hey, if you're interested in learning more, go check out the full article. There's a lot more detail in there.
Who knows, maybe you'll be the one advising the government someday. But until then, keep learning, keep exploring, and we'll catch you on the next deep dive.